Okay, so today we will be discussing. Yesterday we had discussed price weighted index and we had discussed equal weighted index. Today we will discuss market cap weighted index. Market cap weighted index. Now, how will we calculate the weight of each security in a market cap weighted index? Yes, am I audible? How will we calculate the weight of each security in a market cap weighted index?
The total value of the market cap in the index means in the denominator and the numerator will be the
Yes,
market cap
so
of that
weight of
particular.
security A would be market cap of security A divided by the sum of market caps of all securities in the index, right? This is how we will calculate the weight that we shall allocate to the return of each stock in this index, right? So let's do a calculation. Let's do a calculation as to how to calculate the return of a market cap weighted index. I had already discussed what a market cap is yesterday, right? So say there are three stocks in a market cap weighted index. Number of shares outstanding. Number of shares outstanding of stock A is 1500. Number of shares outstanding of stock B is 10,000. And number of shares outstanding of stock C is 3000. Prices as on 1st January 2022 are as follows. Price of stock A is 22, price of stock B is 40 and price of stock C is 34. So guys, what would be the market cap of each of these stocks? 1500 into 22 would be the market cap of stock A. Please calculate what is 15,000 into 20, 1500 into 22?
33,000.
33,000. So what would be the market cap of stock B?
Four,
40 into
4 lakh.
10,000, 4 lakh or 400,000. And market cap of stock C would be 34 into 3, 1 lakh 2,000, right? Sum up the market caps, 400,000 plus
535.
535. Okay, so weight of each of these stocks would be 33,000 by 535.
535.
How much is it?
0.06.
0.6
061. 6.61.
point. मेरा 6.17 आ रहा है. Are all of you getting 6.17?
Yes, sir.
We'll round it off to two decimal places. Weight of stock B would be 400,000 into 400,000 divided by 535. How much is that?
74
74.76.
point
74.76.
76.
And weight of stock C would be 102 divided by 535. Around 19,
19.06.
19.07. Right? So these would be the weights that we will allocate or assign to the returns of each of the stocks. Okay? So let me scroll down. Just a second. Okay. So we have the price on 1st January 2022, which was 22, 40, 34. And we have the weights. Weight of stock A was 6.17, weight of stock B was 74.76, weight of stock C was 19.06. Now say price of the stock on 31st December 2022 is uh, price is, what example had we taken yesterday? Okay, so price is 28, 50 and 30. So what is the return of each of these stocks? Calculate the return, right? I think we had done this yesterday. Return of stock A was 27.27%. Return of stock B was 25%. Return of stock C was minus 11.76%. We had done all of these calculations yesterday, right? So how will you calculate the return of this market cap weighted index? We'll multiply the weight with the return. All these returns we had calculated yesterday. So if you have yesterday's notes with you, please confirm that the returns were the same.
Yes, sir.
So calculate weight, can multiply weight with the return, right? Multiply the weights with the return and let me know what you get. So return would be basically 0.0617 into 0.2727 plus 0.7476 into 0.25 minus 0.1906 into 0.1176. How much do you get? Please tell me. How much are we getting? Has anyone got an answer, please? बोलो 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 guys, इतना टाइम नहीं चलेगा.
18.13.
Very good, Shreya. The answer is 18.13%, right? So this would be the return of an equal weighted index. Now, if you want to replicate this market cap weighted index, then 6.17% of the funds of your replicating portfolio should be allocated to stock A, 74.76 to stock B, and 19.06 to stock C. This is how you can create a portfolio that replicates or mimics a market cap weighted index. Guys, are we good? Any doubts?
Sir, please repeat this last thing.
So, if you want to replicate or mimic this market cap weighted index, then in your replicating portfolio, you will need 6.17% of the funds of your replicating portfolio should be allocated to stock A. 74.76%, 74.76% of the funds of the replicating portfolio would have to be allocated to stocks B, and 19.06% of the funds of the replicating portfolio would have to be allocated to stocks C. ठीक है शेयर? Good.
Okay, sir.
Okay, now what is the advantage of this market cap weighted index? What is the advantage? Securities are neither underrepresented nor overrepresented. They are represented in the proportion to their value in the market, right? So please note down, advantage of a market cap weighted index is securities are neither underrepresented nor overrepresented. They are represented in the proportion to their value in the market. So you can write securities are correctly represented. Right? This is an advantage of the market cap weighted index. Guys, any doubts up till now? बोलो guys, किसी के कोई doubt?
No,
No,
sir.
sir.
Okay, now let's speak of float adjusted market capitalization index. So now we will speak of something called float methodology. What is float methodology? I'll give you an example. With examples, the things would get clearer. Say total shares of a company are 1000 and the price per share is 60. Right? So what is the market cap of this stock, guys?
60,000.
60,000. Now say guys, say out of these 1000 shares, only 400 are owned by the promoter. Remaining 600 are available for public trading. Right? So out of these 1000 shares, 400 are owned by the promoter and 600 are available for public trading. Then the float adjusted market cap of the stock would be, please write down float adjusted market cap would be
Deducting
shares available for public trading into price. How many shares are available for public trading? 600
600.
into price 60. That is how much? 36,000. So the market capitalization of this particular stock is $60,000. But if we adjust for float, that is the float adjusted market capitalization is $36,000. Right? So basically, the float adjusted market capitalization excludes the value of 400 shares held by the promoter or the controlling entity. Please note this down. Float adjusted market capitalization excludes the value of 400 shares held by promoter slash controlling entity because promoters are usually promoters are usually unlikely to sell their shares because promoters are usually unlikely to sell their shares. Guys, are we good? Have we understood what this float adjusted market cap is? Guys, are we good, please? Any doubts here?
No, sir.
Okay. So float adjusted market cap of Tesla would exclude the value of shares held by whom?
Elon.
Elon. Okay. Float adjusted market cap of Amazon would exclude the value of shares held by
Jeff.
Jeff Bezos. Okay. So float adjusted market cap of Reliance would exclude the shares held by would exclude the value of shares held by Mukesh Ambani and family, right? So
Yes.
it excludes the value of the shares held by the promoter and their families. Okay, how will you calculate the weight of a particular stock in a float adjusted market cap index? So weight of stock A would be float adjusted market cap of stock A divided by sum of float adjusted market cap of all stocks in the index. Okay, guys, let's copy this example first. Let's copy this that we had discussed earlier. Right? Let's copy this. So, stock A had 1500 shares outstanding. Stock B had 10,000 shares outstanding. Stock C had 3,000 shares outstanding. Price of stock A was how much? 22, 40, 34. And its weight in an unadjusted market cap was how much? What was the weight, guys, that we had calculated? Weight in unadjusted weights, or weights not adjusted for float. What were the weights that we had calculated?
6.17,
6.17,
Um,
74.
74.76, and 19.07.
19.07. Now, guys, and say out of the total 10,000 shares of stock B, say only 3,000 are available for public trading. The remainder 7,000 shares are held by the promoter. And say all shares of stock A and all shares of stock C are available for public trading. So we have to calculate the weight of each stock in the float adjusted market cap index, right? So now we'll calculate the weight. A, B, C. All 1500 shares of stock A are available for public trading. Only 3000 shares of stock B are available for public trading, and 3000 shares of stock C are available for public trading. Prices 22, 40, 34. Now, float adjusted market cap of each of these stocks is 1500 into 22 is 33,000. 3000 into 40, 120. 3000 into 34, 102. Sum these up. Yes, please sum all of this up. What do you get? Please tell me. 33 plus 102 plus 120. जल्दी बोलो, जल्दी जल्दी.
255.
Okay. So weight of each security in a float adjusted market cap index would be 33 by 255. Weight of stock A would be 33 by 255. Weight of stock B was 120 by 255. And weight of stock C would be 102 by 255. Now please calculate each of the weights. जल्दी जल्दी. Please calculate each of the weights. 33 by 255 is how much?
12.94.
So weight of stock A in this float adjusted market cap index is 12.94. What would be the weight of stock B
47.06.
and weight of stock C?
53.3 आएगा शायद B का.
47 plus 12, 49. 49, 40% आएगा ना.
45 point.
47 plus 12.94 कितना हो गया?
सर
59.
B का रॉन्ग है सर.
हाँ,
B का मार्केट वो गलत निकाला रिटर्न शायद.
हाँ, एक सेकेंड. 120 by 255 कितना हुआ?
47.05.
06.
चलो जो भी.
47.
102 by 255 कितना हुआ? हाँ, तो थर्ड वाले का 40% होगा. 102 by 255 कितना होगा? 40%. ये 47.06.
40%.
राइट. और है सबका यही. गाइस,
Yes, sir.
102 1,02,000 by 2,55,000 is 40%. 120
Yes, sir.
by 255 is 47.06. So these are the weights of each stock in the float adjusted market cap index. ठीक है ना? Now, guys, what was the weight of stock B in the unadjusted market cap index? 74.76. ठीक है ना? Weight of stock B was 74.76 in your normal or unadjusted market capitalization index. But weight of stock B reduced to 47.06 in the float adjusted market cap index. Weight of stock B reduced to 47.06 in the float adjusted market cap index. So what do you mean? What is the interpretation of what we are seeing right now? Guys, what is the interpretation? So the conclusion or the interpretation is that if the promoter holding is high in a particular stock, then its weight in a float adjusted index will be lower than its weight in an unadjusted market cap index. Right, so note this down. If a promoter holding in a stock is high, then its weight in a float adjusted index will be lower than its weight in an unadjusted market cap index. Guys, have you noted this down? This is very important.
Please repeat, sir.
If the promoter holding is high in a stock, then its weight in a float adjusted market cap index will be lower than its weight in an unadjusted market cap index. ठीक है?
Yes, sir.
All good? All good? कोई doubt?
No, sir.
किसी के भी मन में कोई doubt है? ना Nana, Victor, is anyone having any doubt, please?
Sir, does it amplify that means anything that how an investor should go ahead if they see that there's so much of stock means unadjusted means difference in the adjusted and unadjusted?
See, it does not make much of a difference in how you invest, right? It does not make much of an index. But see, a float adjusted market cap index was basically introduced to better match the index weight to the market value actually available to investors, right? It was done for this purpose, to align the index weight to the market value actually available to the general investors, right? So it does not have much with respect to your, it won't be able to frame your investment decision. But per se, if you think like this, if a stock has a very high promoter holding, then from the perspective of the investor will feel safer, right? You will feel safe if the promoter of the company holds a large chunk in the company. Now, see, people in Zomato, if you look at the shareholding pattern of Zomato, then the promoter group has 0% equity in Zomato, right? All equity is owned by either institutions or by the general public. So you will feel much more safer if the promoter holds a large equity in the company, right? So this I am talking from the general perspective. ठीक है ना? ठीक है सुप्रतीक?
Yes, sir.
Naturally, if the promoter does not hold equity in the company, does not hold any equity in the company, then basically he too does not believe in the future of the company, right? So that's why he sold everything.
Okay.
So that's what people are doing right now, right? See, every company is, see, if you watch Shark Tank India, apart from Aman Gupta, who runs boat, all other sharks are loss making, right? All other sharks are giving loss. Lenskart is giving a loss. Mama Earth turned profitable this year. Then what was the company owned by that the other lady? Um,
Sugar.
sugar pharma, sugar cosmetics. Sugar
Pinita.
cosmetics is EBITDA negative, right? So its business profit is basically what is EBITDA, earning before interest, depreciation, taxes, and amortization. So EBITDA basically reflects the business profits of a company. So sugar's cosmetic EBITDA is negative, and these people are guiding you how to start a new company, how to set up a startup, right? So these people are the uh, not these people are not not, they
I
don't deserve those seats, right? They don't deserve to be sharks because they're not making money. Even Anupam Mittal is even Anupam Mittal's company, Shadi.com, and the parent I think is People Inclusive or some name, I don't remember the exact name. Even that company is loss making, ठीक है ना? तो अभी अभी सब सी खेला क्या हो गया है कि if I go and tell my dad कि dad I'm running the company in a loss, तो my dad will beat me left, right, and center. But today people don't speak of net profit or net loss. They are speaking of what? Valuations, right? Everything is running on valuations. Zomato is still giving a loss. Ola is still giving a loss. Um, Swiggy is still giving a loss. But they are speaking of valuations. They are speaking of what bullshit. So, it's for some other day. When I'll discuss equity valuation, we'll discuss this in detail. Right? So, all these people who sit on the seats of Shark Tank, right? All those people are don't deserve to sit there, right? They don't deserve because they themselves are giving huge losses.
So this is nothing. They all have like 100, 200 crore loss only. We had Ashni Grover. He has 3,000 crore plus loss.
अरे तो उसका घर देख, लैम्बोर्गिनी में घूमता है, बता अपने
सर
को
फंडिंग के राउंड उठा उठा के वो काम करते हैं ये लोग, बाद में सारा लॉस आईपीओ निकाल के पब्लिक पे पास
बस वो
कर
भी
देते।
पेटीएम ने भी तो यही किया, सब ये लोग यही खेला है। बट ये सब शरीफ आदमी नहीं कर सकता, ये सब डकैत है। क्या है? दीज पीपल आर डाकू।
सर अच्छा कौन है?
अच्छा
रतन
वो है
टाटा।
श्रेया जो सारा दिन मेहनत करे और चैन की रात को 11 बजते ही उसको चैन की नींद आ जाए। मैं सच्ची बात
It's like
बता रहा हूँ।
shark.
सर आप अपनी बात कर रहे हैं?
नहीं, मैं जनरली मैं अपने देख मेरे को बिजनेस और जॉब और लाइफ का अच्छा एक्सपीरियंस है 14-15 साल का। तो
यस।
मैं ट्रेडर भी हूँ दिन और ब्रोकर भी हूँ। तो मैंने जी लाइफ में बहुत रिस्क भी लिए हुए हैं, बहुत कुछ किया हुआ है, बहुत घाटे भी खाए हुए हैं, बहुत प्रॉफिट भी कमाया हुआ है। तो मुझे लास्ट में जाके ये समझ आ गया कि रात को 12 बजे बिना टेंशन की नींद आ जाए ना, तो दैट इज द बेस्ट लाइफ। ऑल दिस इज अ मनी नेवर एंडिंग गेम। एंड अगर भगवान को तुमको पैसा देना है ना, तो वो फिर देना ही है। नथिंग कैन चेंज दैट। तो वो तुमको बुला बुला
ज्यादा
के
पैसा है
पैसा
तो
देगा।
एफडी करके बैठो,
हैं? नहीं नहीं, एफडी करके
ज्यादा
भी
पैसा
नहीं।
तो एफडी करके बैठो बस।
नहीं, एफडी का भी रेट अच्छा ही। आज तो मैंने सारे अपनी डेट फंड्स को रिडीम करा के सारी एफडीआं करा दी। आई रिडीम्ड ऑल
वही
माय
बोल रहा
डेट
हूँ सर,
फंड्स
रेट
टुडे।
अच्छा हुआ अभी।
मेरे को इंडसइंड बैंक में 7.5% एफडी का इंटरेस्ट मिला। आई गॉट 7.5 इंटरेस्ट एफडी। I was getting a 7.5% interest on FD in IndusInd Bank, so I redeemed all my investments in that fund, and I am going to reinvest that money in FD in IndusInd Bank. So for some other day, अपने
नॉन
काम
कॉलेबल कराओ सर, 7.75 मिलेगा।
हाँ क्या
नॉन
क्या
कॉलेबल करा दो, 7.75 है।
हाँ देखता हूँ। अच्छा नॉन कॉलेबल मतलब यू वोंट बी एबल टू प्री मच्योर रिडीम
ब्रेक
ऐसा?
इट।
हाँ यू वोंट बी एबल, नहीं नहीं वो करा के फायदा नहीं है भाई। मैं स्टॉक ट्रेडर हूँ, कब कब पैसा चला जाए पता नहीं। चलो एनी हाउ,
Senior citizen.
चलो चलो we are going off track now. Let's come to the topic. Okay, so uh, Now, guys, we need to understand the next concept, right? Let's understand the next concept. Okay, so say this is an unadjusted market cap index. I am giving you the values. Okay, stock A, B, C. We have 1500 shares of stock A, 10,000 shares of stock B, 3000 shares of stock C. 20, 40, 34 is the price on 1st Jan 22. Market cap we've already calculated 33,000, 400,000, 1 lakh 2,000. Weight as on 1st January 2022 was 6.17, 74.76, 19.06, 19.07. Okay. So, and the price on 31st December 2022 was how much?
28,
28,
50,
50 and 30. ठीक है. So market cap कितना होगा? What would be the market cap on 31st December? 28 into 1500, 42,000, 50 into 10,000, 5 lakh, and 3,000 into 30, 90,000. So sum this up, how much do you get? 5 lakh plus 42,000 plus 90,000. 5 and 5 number 632. Now guys, please calculate the weight of each stock in this unadjusted market cap index. Weight of stock A कितना होगा? 42,000 by 632. Weight of stock A would be 42,000 by 632. कितना आया?
6.65.
6.65.
6.65. Weight of stock B is 500,000 by 632,000. Or 5 lakh by 5 lakh by 6 lakh 32.
79.12.
29.12. And last is
14.24.
15.24. So, see, guys, now please remember that these weights would be used to or would be used for calculating the return for the period for the next period. ठीक है ना? These weights would be used for calculating for the next period, which is basically from 1st Jan 23 to 31st December 23. So these weights would be used to calculate the return for this period. But the most important thing that we need to see is that weight of stock A has increased from 6.17 to 6.65. Right? So the increase in percentage term is how much? 0.48. Weight of stock B has increased from 74.76 to 79.12, which is how much? Deduct 79.12 from 74.76. How much do you get?
4.36.
4.36. And weight of stock C has decreased from 19.07 to 14.24. So how much is the decrease?
4.83.
4.83. So guys, please note, right? The idea is that prices of stock A and B have increased, right? Please note, prices of stock A and B have increased. Price of stock A has increased from 22 to 28, and price of stock B has increased from 40 to 50. So prices of stock A and B have increased, so its weight in the unadjusted market cap index has also increased by 0.48% and 4.36% respectively. And weight of stock C has decreased because its price has decreased. Right, guys? Can we understand this? Guys, is the picture clear?
Yes, sir.
So
Clear.
please, huh? Hello? Is
It's clear.
anyone okay? So the idea is that if the price of a security increases, its weight in the market cap weighted index increases, and vice versa. If the price of the security increases, its weight on the market cap weighted index increases, and vice versa. This is a very important point. Please note this down. Have you noted this, please? And guys, the other idea is that the portfolio that mimics this market cap weighted index is basically following a momentum strategy. Please note this down as well. The portfolio that mimics this market cap weighted index follows a momentum strategy. Guys, do we know what a momentum strategy is? Do we know what is momentum strategy? Any idea? Okay, so I'll explain, guys.
Sure.
I'll give you a good idea about it. In stock market, there are only two types of strategies. One is momentum, and the other is, guys, other is contrarian.
Break.
Right? Either you can follow a momentum strategy or you can follow a contrarian strategy. Momentums in a momentum strategy, you follow the trend. You follow the trend. You say that the trend is your friend, right? In a momentum strategy, you follow the trend. So basically, what do you do in a momentum strategy? What a trader would do in a momentum strategy is that he will buy stocks whose prices have increased, expecting that the current uptrend shall continue in the future. Please note this down. In a momentum strategy, a trader would buy stocks whose prices have increased, expecting that the current uptrend would continue in the future. And he would sell stocks whose prices have decreased, expecting that the current downtrend will continue in the future. ठीक है ना? So this basically means, guys, what? This basically means that the trader is giving more weight to stocks whose prices have increased and less weight to stocks that whose prices have decreased, right? He's buying stocks whose prices have increased, so he's naturally giving more weight to those stocks whose prices have increased, and he's selling stocks whose prices have decreased, so he's giving less weight to those stocks, right? So this is your momentum strategy. And what's happening in this market cap weighted index, right, guys? What is happening here? Basically, you know more weight is being assigned to stocks whose prices have increased, right? Price of stock A has increased, so its weight in the index has increased. Price of stock B has increased, so its weight in the index has increased. And prices of stock C has decreased, so its weight in the index has decreased. So that's what is happening in the market cap weighted index, and that is what will happen in the replicating portfolio. That is what will happen in the portfolio that replicates the market cap weighted index. So basically, the portfolio that replicates a market cap weighted index follows a momentum strategy, right? It follows a momentum strategy. What is a momentum strategy? You buy those stocks whose prices have increased, expecting that the current uptrend would continue in the future, and vice versa, that is, you give more weight to those stocks in your portfolio whose prices have increased and less weight to those whose prices have decreased. And that's exactly what is happening in this unadjusted market cap, um, unadjusted market cap index. And there would be a similar picture in the replicating portfolio. So the point here is that the replicating portfolio, that is the portfolio that replicates the market cap weighted index, follows a momentum strategy. Guys, are we good, please? Any doubts here?
No, sir.
Is anyone having any doubt, please? Bolo. Shreya, Ananya, Ayush, Anmol.
No,
Sab.
sir.
No, sir.
No, sir.
Okay. Guys, think of this. Will we need to adjust the market cap weighted index for stock splits? Do we need to adjust it for stock splits?
No, sir.
No, we need not adjust it for stock splits because market cap is unaffected by stock split. That is what we had discussed yesterday, that the market cap of a stock is unaffected by stock split. The number of, after a stock split, the number of shares increase, but the price of per share decreases proportionately. So the market cap is the same. So please write down market cap weighted index need not be adjusted for stock splits. Please write down market cap weighted index need not be adjusted for stock split slash stock dividends. Also write this, need not be adjusted for stock split slash stock dividend. What is stock dividend? When the company pays dividend in form of stock, not in form of cash, right? Now please, the next thing, please write down examples of examples of float adjusted market cap index. Float adjusted market cap index. So S&P 500 is a float adjusted market cap index. Nifty 50 is a float adjusted market cap index. Nifty is also float adjusted. S&P is also float adjusted. S&P 500. Okay. So we are done with market cap weighted index and float adjusted market cap indexes, right? Any doubts, guys? Should I move to the last type of index weighting that we need to discuss? Any
Yes.
doubts?
Please, can you guys explain the contrarian strategy?
Okay, so Victor, contrarian strategy is, you know what? So when you buy stocks whose prices have decreased, expecting a trend reversal, and you
Okay.
sell stocks whose prices have increased, expecting a reversal in trend, right? So when you buy stocks whose prices have decreased, expecting a trend reversal, that is your contrarian strategy. And when you sell stocks whose prices have increased, expecting a trend reversal. Okay. Anyone else? Any doubts, please? Chalo. Then the last index weighting scheme that we need to discover is your fundamental weighting. Yesterday we had discussed, when I say fundamentals, what do I mean?
Cash flow, book value, revenue, dividends.
Yes. So we are speaking of dividends, we are speaking of companies' earnings, we are speaking of revenue, we are speaking of cash flows, right? So when I say fundamentals of a company, I usually mean all these metrics. Okay. Now, in a fundamental weighted index, weights are calculated on the basis of fundamentals such as dividends, cash flows, revenues, and earnings. And the most important point is that the fundamental weighted index is unaffected by the price of the constituent securities, unlike your price weighted index, unlike your market cap weighted index, right? So please note this down. This is an important point. Fundamental weighted index is unaffected by the price of the security, unlike price weighted index and market cap weighted index. So we were discussing price weighted index yesterday, and we were saying that in a price weighted index, stock with the highest price has the highest weight, and in a market cap weighted index, we had just discussed that, as the price of the stock increases, its weight in the stock increase its weight in the index increases, and vice versa. But in a fundamental weighted index, there is no such problem. Here, weights are calculated on the basis of fundamentals such as dividends, earnings, cash flows, etc. etc. So, fluctuation in the price of the stock does not result in a change in the weight of a particular stock in a fundamental weighted index. So, change in the price has no impact. Change in price has no impact in a fundamental weighted index. And this is unlike your price weighted and market cap weighted index, because you calculate weight of each stock in the index based on the fundamentals of the company. Right, guys? Any doubts here, please? Is anyone having any doubts?
No, sir.
Okay, so I'll give you an example which is not in your book, but this example will help you when I discuss the last reading on equity securities. Right, last reading is basically basics of equity valuation. This particular example that I discuss now will help you there, right? Okay, now please note down, guys, most stocks, or rather than most stocks, right, weights of most stocks in a fundamental weighted index, weights of most stocks in a fundamental weighted index is calculated on the basis of earning yield. Weights of most stocks in a fundamental weighted index is calculated on the basis of earning yield. Now, what is earning yield, guys? Any idea what is earning yield? So, earning yield is equal to the EPS of a particular company divided by its stock price. Right? Please note down, earning yield is EPS, earning per share of a particular company divided by its stock price. And what does earning yield reflect? What does it show? So basically, earning yield reflects how much EPS a company generates for every dollar invested in the company. Please note this down. This is very important. So earning yield reflects or shows how much EPS a company generates for every dollar invested in the company. Okay, so we'll take forward the example that we were, we'll continue with the same example. Right, say EPS of company A is 7, B is 10, C is 4.25. And what were the prices of these stocks on 1st January 2022? एक बार सुप्रतीक प्राइस बोल दो.
22,
40 और लास्ट कौन सा था?
34.
34.
34. So earning yield calculate करो. Calculate the earning yield. Earning yield is EPS by price. Divide the EPS of stock A by its price. EPS of stock B by its price. जल्दी बताना.
EPS of stock A by its price.
7 by 22.
31.82.
इसको 31.82 को let's for simplicity purposes 0.32 लिख लो. Right, 0.32. Earning yield of stock B
0.25.
0.25. And earning yield of stock C
12.5.
0.125. Right? Okay. Now, what is the interpretation of each of these earning yields?
$1 invested, you will earn 0.32.
Yes. Every dollar invested in stock A generates approximately 32 cents in earnings. Every dollar invested in stock B generates approximately 25 cents in earnings. Every dollar invested in stock C generates approx 0.125 cents in or 12.5 cents in earnings, right? Every dollar invested in stock B generates 25 cents in earnings. Every dollar invested in stock C generates approximately 12.5 cents in earnings. Right? Guys, are we good with the intuition, the interpretation?
Yes, sir.
Okay, now how will you calculate the weight of each stock in the fundamental weighted index? Now we'll calculate the weight. It's very simple. Weight of stock A is earning yield of stock A divided by the sum of earning yields of all stocks in the index. So what is the sum? 0.32 plus 0.25 plus 0.125. This is how much? 0.32 plus 0.657, 0.695. Okay, so weight of stock A is 0.32 by 0.695. How much is this? 0.32 by 0.695. Respo-
0.46.04.
0.46. So 46. So weight that we would assign to stock A is 46%. Weight that we'll assign to stock B is 0.25 by
0.36.
36%. We'll assign 36% weight to stock B. And last one is 0.125 by 0.695. How much is that? 46, 36, 18%. Right? So this is how we calculate weights. Okay. Now guys, think of this. Out of these three stocks, uh, which one would you prefer to invest in? A, B, or C?
A.
Yes, you would want to
A.
invest in stock A because it's generating the highest amount of earning per dollar invested, right? And guys, please note, guys, do you get this?
Yes, sir.
You would want to invest in stock A now because it's generating the highest amount highest earnings, right, per dollar invested. It's generating the highest earnings per dollar invested. And also note guys, the weight of this stock is the highest. Weight of stock A in this index is
Highest.
highest, right? So guys, please, stock. What is stock A? Stock A is a value stock. Please note this. Stock A is a value stock. Now I'll tell you later on what a value stock is. Okay. Basically, earning yield of stock A is high. Why? because it's offering higher earnings at a lower price, right guys? It's offering higher earnings at a lower price. Look at stock C. It's only offering $4.25 in earnings, but you'll have to invest $34. But if you invest in stock A, you'll get more earnings, but at a lower price, right? So stock A is earning yield of stock A is high because it's offering higher earnings at a lower price. So can I say that that stock A is relatively inexpensive compared to its earning potential? Can I say this, guys? That stock A is inexpensive compared to its earning potential because it's
Yes.
offering more earnings at a lower
The
price?
price.
Yes. So this particular stock is inexpensive compared to its earning potential. So such stocks that are trading at a price that is lower relative to its fundamentals is called a value stock. Please note this down. Stocks that are trading at a price that is lower relative to its fundamentals is called a value stock. So in our example, stock A is a value stock and it has the highest weight in the index. It has the highest weight in the fundamental weighted index. So, usually value stocks would have higher weights in fundamental weighted index. As we can see here, stock A is a value stock and it has the highest weight in this fundamental weighted index. And what are value stocks? Value stocks are stocks which are relatively inexpensive, which are trading at a price which is lower relative to its fundamental, right? So that is why the reason, what I'm trying to say is that value stocks have the highest weightage in a fundamental weighted index. Value, please note this, value stocks have the highest weightage in a fundamental weighted index. What is a value stock? Which is relatively cheaper, which is relatively inexpensive, which is trading at a price which is lower compared to its fundamentals. And value stocks have the highest weight in a fundamental weighted index. So that is why, fundamental weighted, now very important term, fundamental weighted index are said to have a, please note down, are said to have a value tilt. Why are we saying value tilt? Because value stocks have the highest weight in a fundamental weighted index. So such indexes, such fundamental weighted index are said to have value tilt. They have more, they have a higher weightage. They are more tilted towards value stocks. Okay? They have a higher weightage or they are more tilted towards value stocks. Guys, are we good? Any doubts, please? Guys, is anyone having any doubt?
Good, sir.
Value tilt, can you explain again?
So this index, this fundamental weighted index is giving higher weight to value stocks. So it is tilted towards value stocks. That is why we say it has a value tilt. Okay, na?
Okay. Okay.
It's giving more weight to value stocks. That is why we are saying it has a value tilt. It's tilted towards value stocks. ठीक है? ठीक है सुप्रतीक, समझ में आया ये
Yes.
बात? So
Yes, sir.
basically value tilt is basically, we are basically saying that more weight is given to value stocks in a fundamental weighted index. ठीक है ना? More weight is given to value stocks in a fundamental weighted index. So जो ये explanation है, the explanation that I just gave you, you won't find these explanations in your